Okay, it looks like it is the top of the hour, so I'm going to go ahead and start the broadcast. If you guys could mute, that would be great.
Muted.
Hello everyone, and thank you for joining us for today's presentation as part of the Industry Insight webinar series. The topic this time is how to clean up your firm's accounting. Speaking today will be Erica Bursler and Pam Rosa. Erica Bursler is Manager of Customer Success at CosmoLex, developers of a cloud-based legal billing and trust accounting system specifically designed for solo and small law firms. Erica has a BS in Business Administration and 5 years experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. She has given numerous presentations on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance. Pam Rosa is a management consultant with over 25 years in legal industry experience. She was the managing director of a mid-sized law firm in Lehigh Valley, working with legacy legal-specific practice management packages that included accounting. She is certified in QuickBooks Pro for desktop, online, and enterprise editions, as well as a certified Xero consultant. The Industry Insight webinar series is hosted by the ABA Legal Technology Resource Center. To stay updated on upcoming webinars or view previous videos, visit ambar.org/industryinsight. You can also stay updated on legal technology news through our blog, www.lawtechnologytoday.org. The presentation today will be followed by a Q&A. Please enter your questions into the question box in the webinar panel on the right side of your screen. All questions will be answered at the end of the presentation. We are recording this webinar, and we will be sending the video in a follow-up email in a few days. And we will also post the video on our blog, which again is www.lawtechnologytoday.org. Thank you all for joining us, and we'll now begin the webinar.
Great. Thank you so much, Chelsea. So the first thing I want to do is start with our agenda and what we'll be covering today. First would be understanding law firm accounting, then covering the most common challenges that law firms face. Next would be your legal accounting checklist for 2016, and then also how can technology help with all of this. So first, let's talk about what are the components of legal accounting. So it's very important to have, before we get into specific challenges or tips and whatnot, to have a really good understanding as to all that is contained within legal accounting. The three components are business accounting, matter cost income accounting, and fee advances and retainer. So let me just explain each one of those briefly. Business accounting, which is also known as the back office accounting, that's your facility, payroll, paper, computers. This is the accounting which is handled by each and every business. And also businesses and law firms, they book the revenue and expenses, profit and loss, and assets, liabilities, and equity to the balance sheet. So that's standard amongst pretty much all companies. But this has nothing to do with the matter management that is unique to a law practice. And that's what takes you to the next item, which is matter cost and income accounting. So to properly post client costs, cost reimbursements, and fee income to the general ledger. That's specific to law firms, something they definitely need to handle differently. And then your fee advances and retainer accounting. That manages your client funds being held on account to pay legal fees and expenses, and it could also include escrow funds such as personal injury settlements and disbursements of all of those funds. Now these are not isolated components. They interact with each of the others, so that all three parts interact with each other all the time, and that's not it. The three together also interact with your billing data, and very often law firms treat their accounting or their accounting system separate from their billing or their billing system. And as you'll see by the end of this presentation, how it becomes the root cause of many of the issues that we'll be discussing. So now that we understand the overall topic, let's dive into a few common challenges that law firms face. First is use of legal-specific chart of accounts. Now the chart of accounts is the foundation of double entry bookkeeping. Each and every financial transaction will impact two chart of accounts. One would be debited and the other would be credited. For example, paying an expense such as rent will decrease the bank account and increase the rent expense account. And law firm accounting needs are very unique, and for this, your accounting system should be customized to have a unique set of chart of accounts. And I'll show an example a little bit later of a legal specific chart of account as well. So this is just a listing of some of the legal specific items that we're talking about, but it's more than just this list. It's also posting the transactions correctly. Are trust funds going to the correct accounts? Are client costs being posted to the right account? Are invoice payments allocated correctly? So we're going to review all of those today. A bigger issue is actually how do you enforce correct chart of account usage? If a staff member needs to remember which chart of account to use all the time, then of course sooner or later mistakes will happen. You know that your staff, your secretary, your paralegals, they don't have accounting backgrounds, most likely. So to rely on them to remember which account to use can, of course, increase the risk of error. A legal-specific accounting system will provide these types of chart of accounts out of the box and also should enforce correct use. A general purpose accounting software will need to be customized, and then correct use will need to be remembered. So that's just a little differentiator with using general software versus legal specific. Our second item, okay, so before we get into business accounting, let's get into trust accounting. That is an essential, and it is part of your overall legal accounting. IOLTA accounting requires due diligence to be compliant. And what we mean by that is proper bookkeeping is needed not only for smooth reporting at the end of the year, but we all know the consequences which can come if your books are poorly cared for, especially when you're dealing with client funds. And that's what makes your IOLTA accounting a specific item to focus on in addition to your overall business accounting. Now, with the IOLTA specifically, the firm must ensure that there's no commingling of the funds whatsoever. You also must show the ledger and running balances for each and every matter, and there must be no overdraft allowed at the matter level. So for all practical purposes, you end up treating each matter kind of like its own bank account. You want to see money in, money out, and not have an overdraft there. You must provide a three-way reconciliation, and that covers your bank balance, your book balance, and also all of your client ledgers compared as well. And again, a legal-specific solution should provide support for IOLTA accounting compliance out of the box, since that is specific to attorneys. Third item, okay, client cost recovery. Now this refers to paying client costs out of pocket and then seeking reimbursement. Now there are three issues around this. First is leakage. It's not uncommon for matter expenses to be paid from, let's say, your accounting software or even by credit cards. And then you may forget to post it to the matter, which would be maybe in your billing software. Since most practice management softwares include invoicing clients for time and costs, but not the accounting, this results in leakage, which is forgetting to seek reimbursement for that cost you have out of pocket. That also can result in overlooking overhead expenses. You know, you may be paying for your photocopies or your certain business expenses that you forget to pass through as well. So your best defense is to set up a system in such a way that the time of incurring the cost, so when you're entering that business cost or when you're importing your credit card statements, you can immediately allocate the cost to a matter. That will definitely prevent leakage and prevent forgetting to seek that reimbursement. Also, accounting issues. Some of you may post your costs to advanced client costs, which is a balance sheet account, and some of you may post it to reimbursable client costs, which is an expense account on the profit and loss. And others may use a combination of both. So whatever you choose, of course this is between you and your accountant, that is a business decision and a tax decision you need to make, but ensure your system can support what type of account you choose, as this will have big ramifications on your balance sheet and your profit and loss. So make sure that whatever system you're using follows through in terms of the type of cost account you want to use. And lastly, here's your indirect costs. So in our experience, indirect costs is the largest area of leakage for most firms. And handling this in an accounting system can be very confusing. So you have your overhead, I mentioned this before, this is part of leakage, but your overhead, photocopies, phone expenses, travel, they're already expenses of the firm that you're able to charge the client. So how do you account for billing these costs, which have been paid many months, possibly prior? And once those are paid, how will the income be accounted for once it's billed through the client and that invoice is paid? how do you account for that income? So this is something to really have close focus on, and typically a legal specific solution will have those items built in, but if using a general software, you need to make sure you're following certain guidelines so this is handled properly. All right, number 4, and we're covering 5 items specifically for challenges. So the 4th one is allocating your revenue receipts. As invoices get paid, whether it's full or partial payment, how do you book that income? An invoice can have various elements, costs, fees, finance charges. All of this is not 100% income. You have different areas that need to be booked properly. So due to complexities in the accounting systems, as those are not designated for legal needs, lawyers often ignore allocation and simply recognize payments as revenue. You have a $500 invoice, you say, I received $500, that's my revenue. But that actually inflates your practice's revenue, and that of course affects your tax filing. You need to be able to allocate it properly through each account. So let me just walk through an example of the correct way to book your invoice payments. So liabilities and costs must be paid first. That's prior to applying anything to your income. So this is key when you have a partial payment. If it's a $500 invoice and you're only receiving $250, that first needs to go to your liabilities and costs. Now, in general business accounting software, that requires splitting a single invoice into several and applying separate payments. But a legal-specific system should be able to do your allocations automatically, whether it's with full invoice payment or partial over a period of time. So it's important to notate that not only are the different portions of the invoice allocated to the proper general ledger accounts, you may have 5 different entries for one invoice, but also that a partial payment is applied properly. And lastly here is duplicate data entries. Since law practice management and business accounting are often in 2 separate systems, it's essential that the same data appears in both systems, of course. They need to be reconciled with each other. Imagine if you have a keying error that occurs when you're entering the data into one system or another, or somebody referenced the wrong matter in terms of a balance. Finding that and figuring out what happened could be a nightmare and could take a lot of time. And exports, imports, syncs, those are typically unstable and don't always work properly. So you don't want to 100% rely on any sort of automatic syncing or 2 programs working together. So with that, I'm going to pass it along to Pam, who will walk you through various items from your accounting checklist. Pam?
Thank you, Erica. The most neglected accounting task all year long is the most important to complete at the year end. Surveys have shown that only 30% of businesses stay up to date on bank reconciliations, and a whopping 50% haven't reconciled for 6 months or more. This would be devastating with IOLTA accounts, but that's another topic. If you're one of the 50%, you should follow this process to be brought up to date. You need to clear your transactions carefully. With so many transactions, there are likely many with the same amount or with the same name. Be sure to clear the ones that correspond to the monthly statement you're reconciling. Are there transactions in the bank statement that don't match what's in your books? For example, is check 126 written to James Smith for $250 in your register, but for $2,500 on the bank statement? Or does your register have the payee as James Smith, but the check is written to cash? The first line of defense to fraud and embezzlement is doing the bank reconciliation. As you complete the process, are there uncleared checks that are 6 months or older? You need to research these. Were they simply entry errors? Is there a vendor that tends to hold checks and then bulk deposit them? Is there an outstanding vendor to which the vendor bill to which the check was supposed to be applied but wasn't? All of this is really important as you're preparing for your taxes. Are there undeclared deposit? The same questions apply. Are there entry errors? Did you batch several payments but didn't clear the deposit in your system? I've seen that happen frequently where someone puts, especially with other accounting products, they batch 2 or 3 deposits together, but they've also entered them separately. And now they're confused because their bank account is much higher than in their books than it is in the bank. Be sure that all your bank fees are entered and cleared. Since fees are posted by the bank and appear on the statement, It is a common error to forget to enter the fees when doing the bank reconciliation. I've frequently received frantic calls from clients who can't balance their statements, and they've reconciled all the transactions and they're searching and searching for transposition errors or other errors, and then we find that the difference is the fees. And please never use an adjustment to enter fees. Use the bank fee expense account. There are several types of adjustments, but the one I'm questioned about the most is month-end reconciling adjustment. You complete your bank reconciliation and are off. What is a reasonable adjustment, I'm usually asked? Well, that depends. In your IOLTA account, no adjustment is allowed. In your operating account, it's a cost-benefit question. First, remember that a multiple of 9 frequently means there's a transposition error in one of the transactions, so that'll make it a little easier to find. Second, determine your personal threshold. I usually recommend that something under $5 is acceptable, but also be careful, however, about recurring monthly adjustments, even if it's as small as $5, because that suggests that something is really off in your books. Client retainer balances. It's important to clean these up for the year end. Have you completed the work on the matter? Did you bill your time and get paid from the retainer? Very frequently, small firms forget to transfer payment for their billed time from the trust account to the firm account. If you've been paid, then you must refund the balance. Year end is a good time to do this kind of cleanup. When was the last transaction for your client? Is the matter dormant? Is it closed? Or are you expecting to do more work? And how much is remaining? Some retainer agreements specify a minimum that will not be billed or refunded. For example, less than $5 or $10. Now, client trust activities. Are there outstanding transactions to be paid on a matter? Have your settlement funds cleared? Have all fees been taken? Where funds held to pay expenses, for example, taxes on a real estate transaction, have those expenses been paid? Refund any remaining monies to your client. Then always run a 3-way reconciliation report after you've made these adjustments to ensure that all balances are correct. Since most firms report on a cash basis, run the appropriate reports to compare total fee income to paid invoices. Some accounting software provides the option to change to accruals so you can run an accounts receivable report. What's important here is to ensure all income is posted correctly, and it also gives you the opportunity to remind your slower paying clients that they have an outstanding invoice. Reimbursable client costs on the profit and loss will not necessarily equal your reimbursed client income. Run the appropriate reports to determine what has not been paid and how long these expenses have aged. Is there a good likelihood that you will be paid? Is it time to write off the expense as a loss? And please remember that your expert witnesses are to get a 1099 for any fees over $600. In other words, total expense over $600. You need to have a W-9 on file for all your expert witnesses, co-counsels, referring counsel, etc. And finally, take a look at your balance sheet. What liabilities does the firm have? Do you have long-term liabilities? When were they opened? Do the payments reflect the debt service agreement as you look over the account? Are payments being allocated to the correct debt? Frequently, when you have more than one debt, it's not uncommon for you to post it incorrectly, and then look like you've paid down one obligation quicker than you've paid down another. For short-term obligations, again, when were they opened? Do the payments reflect the debt service agreement? And for lines of credit, very frequently banks require that it has no balance, it has a cleanup period, usually about 30 days. And have you done that? And as you continue to look down your balance sheet, towards the bottom you'll find your equity. How are partners and owners' draws allocated? And review all of these to ensure that the appropriate owner expenses are allocated to this account. Check with your accounting professional that legitimate firm expenses have not been allocated as owner's draw. Erica?
Great, thank you so much, Pam. Okay, so it seems unless our industry can put a practice management and legal accounting system together, the challenges that we've discussed, especially towards the beginning of the presentation, they're unlikely to go away. By including your practice management, your billing, your calendaring, documents, tasks, along with law firm accounting, which is what we learned about today, you end up with a complete law firm management solution. And that's really how you can bridge that gap between your practice management and law firm accounting. So really quickly, I'm going to go through a quick demonstration using CosmoLex, focusing purely on accounting, how certain activities that we've discussed today, both what Pam mentioned and also some of the challenges that we discussed, how those can be done or completed in an all-inclusive solution. So with that, I'm going to switch over to CosmoLex. And one point I want to bring up, we talked about your various matter costs and whatnot. I mentioned even leakage. And how do you make sure that you don't forget to seek reimbursement for certain costs? That's very important, and a regular business or general business accounting software is not concerned about that because that's unique to the legal industry. So here in the software, I have all of my matters listed, and if I wanted to post a cost, let's say for a filing fee, that's considered a hard or direct cost. So I have this button here for hard cost. Now, what makes that so special? Well, here, again, you're having to deal with your money out of pocket, which is your business accounting, seeking reimbursement, which is technically putting an expense card on an invoice for your client to pay, and those are billing and accounting activities. And you also need to make some sort of entry on your general ledger at the same time. You'll be referencing several screens, programs. Here, it's all in one area. At the very top is my business accounting entry. So let's say it was $25 for a filing fee, for example. Let's say it was a check. I can say it was a check. I can even print it from here if I'd like. And in the bottom portion, this is my expense card. So in the same step, I'm creating an expense card because I'm saying that this should be reimbursed. So that will be completed, and also up here you have your accounting entry made. So not only is that entry being made for you in the same step, but it is defaulted to the proper account. If you use, we have a setting in the software, if you use advanced client costs, it will default to that. If you use reimbursable client costs, it will default to that. You can't say this is just a general business expense because you're seeking reimbursement. So it does default to that proper account for you and really takes out the guesswork so that your staff or whoever may be entering these items don't have to have that accounting experience. Also, trust accounting. When you're doing trust accounting, that crosses over with your billing when you're paying invoices from trust, and also with your accounting because you need to record that as liability. So if I were to go ahead and add, let's say, a trust retainer here, I'm adding, let's say, $1,000. So this is recorded from a billing standpoint, meaning I'll see $1,000 added to my retainer that can be used towards an invoice. And also I have my accounting entry, okay, as a liability. So I can't record this as income. I can't record it as anything else. It has to be recorded as a liability. So again, you have that account option entered while you're doing your retainer entry. So anywhere in the software, actually, because there's fully integrated accounting, anytime there's a transaction, whether it's an expense, a business expense, a matter cost, a retainer, an invoice payment, at every single point there's an account field which either gives you full options or is restricted to what it should be. One of the main items in terms of the accounting happening is one of the items that I mentioned, which is your invoicing. So if you received a payment on an invoice, and you have to make all of those general ledger entries, because remember, you have on that invoice, you have fees, you have costs, you have some maybe finance charges, late fees, whatever the case may be. All of that is on one invoice. But from an accounting standpoint, it's not all one entry. You also have your different allocations. Like I said, the legal fee, the cost, the finance charges, they all have to be entered separately from an accounting standpoint. For billing, you receive payment. That's all the system cares about. So let me show an example of one of my invoices that all I did was apply a payment. I didn't have to make any accounting entries. So this is the details, kind of my internal view here. So this is an invoice that has everything on it. You have your legal fees, your costs, your discounts, late fees, whatever the case may be, and you apply one payment. If you're using a separate system, of course, you'd have to go into the general accounting software and make your general ledger entries. But because of various settings and because the system knows what is fee, what is cost, the allocations are actually happening automatically when you receive that payment. So you're not having to do, in this case, 5 entries on your own in a separate system, or even in the same system. You don't have to manually make those entries. They are done for you. All right, so that's another way which the billing and accounting definitely cross paths frequently. And the last thing to bring up is your reports. So as you're entering your various transactions, like I said, could be your business expenses, could be matter costs, invoice payments, at every point something is being entered on either the profit and loss or your balance sheet. And so they're being updated in real time when you have an all-in-one system. So right here, for instance, I can actually pull up my profit and loss at any point, and I can generate that straight from here. No need to have your accountant or somebody else do it. You can actually produce it straight from the software since all the data is in there. Same thing with your balance sheet and also your general ledger. So if you wanted to see a printout of a certain account, you know, how much you spent on office supplies this month or what the breakdown might have been there, you can print out a report for either individual accounts or individual types of accounts. If you just want to print out your profit and loss accounts, your balance sheet accounts, expense accounts, you have a lot of flexibility here. So at the end of the year, if you're following all the steps that Pam outlined in terms of your checklist, making sure you're doing your reconciliations and your proper recording throughout the year, at the end of the year, your job will be very simple. You just have to produce these documents. Everything will be in a pretty neat package for you to do your tax accounting. Of course, it all comes down to preparing throughout the year to make sure that everything's much easier come year end. And that takes us to just a quick, here we go, to a quick outline of the solution that we provide. So this is just an overall image just to kind of cover all the areas that are in CosmoLex. And of course, they all interact with each other. You have your legal time and billing, you need your business accounting, your trust accounting, but also your practice management, your calendaring tasks, your document management. All of those are essential to running a law practice. And of course, all these activities can be handled in 3, 4, 5 separate tools. But since there's a lot of crossover and a lot of activities that depend on each other, having it all in one will reduce a lot of error and, of course, a lot of time. So I just want to outline an offer that we have here for today's attendees, and this is for a one-on-one analysis of your setup. We do understand everybody has different needs, everybody has a different setup in their office, so if you'd like to have a conversation with us, we have 10 30-minute appointments available, and you can schedule a call by emailing consult@CosmoLex.com. And be sure to include a specific date and time for your call. And I'm just going to leave that up for a moment. If anybody wants to jot it down, feel free. If you want to send a quick email, feel free to do so as well. And like I said, we have 10 spots for that available. And just to wrap up really quickly, I have here our contact information. If you need to reach out to either myself or Pam, you're welcome to. If you have any detailed questions pertaining to your firm specifically, we're going to open the floor for questions right now. But if it's anything specific to your firm and how you set up and very detailed, we encourage you to take advantage of that one-on-one consultation. And you can also reach out to either one of us. So let's go ahead and go to questions.
Great, thank you. So I just want to remind everyone that if you do have a question, please go ahead and enter it now into the question box on your webinar panel. The first question that we have right now is, can I post costs to matter once I get credit card bill? Once I get a credit card bill.
I'm sorry, what was that about the credit card bill?
The question says, can I post cost to matter once I get a credit card bill?
Oh, gotcha. Yes, absolutely. And that's one of the items that we actually were discussing in our presentation. So one thing that's essential is, of course, taking care of your credit card, your business credit card is both for your business expenses, but also, as mentioned, your matter costs. You may have paid for filing fees, anything like that, on that same credit card. So in CosmoLex, we actually have the ability to set up a credit card bank. So this is specifically a credit card account that I'm tracking within my system. And then you're able to, for instance, here I have Amex, then you're able to import your credit card statements. So at the end of the month, say you have 100 transactions on your credit card, as opposed to saving your receipts and putting them in throughout the month, just import your whole credit card statement, and upon that import, it asks you both to select the account for that expense, and you have the option to link that to a matter if need be. So you can do that all in the same process.
Perfect, thank you. The next question that we have is, how can I make sure cost is always posted to the correct account so that I can double check?
Okay, so that depends on the type of cost that you're talking about. But if it's a matter cost, especially, you have, in terms of the hard costs that I mentioned before, this default is essential. We have a settings section where you can say if it's advanced or reimbursable, and then you really don't have to touch this field at all. It's actually set for you. Same thing for the retainers. Again, by having a legal specific type of solution, those types of defaults are able to be set for you. For your business expenses, you can even set up for certain payees, like for instance, your property management people for your rent. You can set them to always be set to rent, so that way you don't have to worry about that each time an expense comes in. So defaults are definitely key to make sure that the proper accounts are chosen each time.
Great, thank you. The next question that we have is, can the system keep up with more than one account? Are our trust accounts separate than our operating?
Absolutely. Yeah, in our system, you can have as many banks as need be. I mean, this is my test account. You can see I have about 15 banks, and I have a combination of trust accounts and operating accounts. But the essential part is your bank accounts always need to be kept separate. From a business account, you can cut any expenses that you want. From a trust account, you can't do any transactions from the bank level. Everything's from the matter level. And of course, that's because, again, it's a legal specific software. So we have those certain criteria in place, but you can track as many bank accounts as need be.
Thank you. The next question that we have is CosmoLex used for both accrual and cash accounting?
CosmoLex is used for cash accounting only at this point, since that is most common with law firms.
Perfect, thank you. And then the next question that we have is, can I edit general ledger accounts?
Yes, we do have here, and this is part of the legal specific chart of accounts I mentioned earlier, is in this chart of accounts list, we provide you with many of the things that you may normally add in a general accounting software, like your retainer accounts, your client cost accounts, your fee income accounts. Those are provided for you. But if you want to add, say, sub-accounts for office supplies, and you want to have a breakdown, printer supplies, paper supplies, whatever it may be, you can add sub-accounts, you can add accounts, you can also edit. So we give you free rein to go ahead and make this what it needs to be for you.
Great, thank you. It looks like that is all the time that we have for today. I'd like to thank our sponsor, CosmoLex, and thank you all for attending our webinar today as part of the LTRC Industry Insight Series. And thank you so much, Pam and Erica, for presenting today.
You're very welcome. Have a good day.
Thank you so much.
Thank you. We'll now conclude the webinar.